How risky do you want to be with your portfolio? How risk tolerant are you when losses start to pile up? Of course, we all want gains in our public investments, but we know that the stock market goes up and down. Now, in my industry, we often try to ask our clients a whole bunch of questions called a risk tolerance about how risky they want to be, and we ask questions around, what if your investments go down 20 or 30%? How would that make you feel? Would you rather have an investment that could go up 20% but has a chance of going down 40 or 50% versus one that might stay more in the middle, less chance of losses but not as many gains? And this helps us try to gauge the risk tolerance of our clients. But here in the last couple months, you all have gone through a real-time risk tolerance exercise. The stock market plummeted in March and has rocketed back up. And so you can see in your own portfolio those paper losses that piled up, followed by gains. And how did you feel during that experiment? When the market was going down 5% a day and starting to bottom out, did you feel like selling? Did you think, oh, I just got to get out of this market? Did you feel like buying? Oh, this is a good buying opportunity for me. How did that make you feel? It's a great real-time experiment. And so I'm really happy that you all have been able to go through this, but take the time to think about how it made you feel. Now, that is the good news, is that we got to go through this and kind of experience it. And so you can now have a better understanding of your own feelings and your own risk tolerance. Your tolerance for handling those paper losses, realizing, oh, this isn't a big deal, it's going to come back up. The downside is that this fall and recovery was very quick. And so while you're having these feelings of losses at the bottom, within a few weeks, it was starting to bounce back. And so you got to feel better right away. A lot of bear markets take months or even years to recover. So what I really want you to do is think back when that was going down 5% a day and starting to bottom out, and you had lost 10, 20, 30% of the value of your portfolio. Think back to that time and think about your feelings, how it made you feel, and what if it had stayed there for a few months? What if those losses had stuck around, kind of bounced a little bit, but the losses went into this summer? What if those losses kept going into the fall? All right, we can easily imagine this with the news of the economy today. What if the stock market was just still down that 30%? How would that make you feel? Would you really be thinking, oh, I've got to get out, I've got to sell, the economy's terrible, I've lost 25% of the value of my portfolio? Or would you think, no, this is a good time to buy, I know that it's going to come back, but it's been months and months and months. So again, this is a great real-time experiment for you to understand your own risk tolerance for the public stock market. I hope you have a great rest of your day.